Home prices have gone up by about 50% in just the last 5 years in the Orange County housing market. So are we finally due for a downturn in the market? And if you're thinking of buying or selling a home in 2025, what should you generally expect to happen over the next year? Well, that's exactly what we're going to be talking about on today's episode. So if this is your first time tuning in, hi, I'm Josh Alexander, your local Orange County real estate agent, and I've been educating both buyers and sellers how to successfully sell and buy a home for almost 10 years now. So on today's episode, we're going to be going over my 2025 housing market forecast for Orange County. So let's go ahead and get into it. So before we deep dive into the data today, I always want to start out by saying that no one has a crystal ball, including myself. We don't know exactly what's going to happen in the housing market, but what I am going to do today is look at all the data and the trends to give you a much better idea of what you can generally expect to see in 2025 if all of these trends and expectations continue. And that being said, if you watched my monthly updates before, I always say this as well, that if you're thinking of buying or selling a home and you're watching this right now, you're most likely not an investor. You're someone that's either been living in a home for a long time or someone looking to purchase a home to be in that home for a long time as well. So your time horizons are completely different than investors. So you're not trying to figure out what's happening month to month. You're going to be looking at either what's happening year to year or even 5, 10 years, decades later. So you need to approach it a little bit differently. And the best way to do that is to analyze your finances, analyze your timing, and figure out if now is a good time for you to either buy or sell a home. So with that being said, let's go ahead and deep dive into the data. And today we're going to start with interest rates because I know that's on the top of most people's minds. Okay, so there's no way around it. Predicting interest rates has been one of, if not the hardest thing to predict in the housing market over the last couple years. So this year we saw rates as high as 7.25 and as low as about 6.1. So they've been all over the place. And currently we're hovering around 6.9% as I record this in the middle of December. Now that being said, there are a lot of trends happening right now that are definitely in favor of interest rates slowly falling next year, including inflation over the long run is still continuing to go down. Unemployment is actually going up a little bit, which does help out interest rates go down. And the Fed has started reducing their rates, which doesn't have a direct impact on mortgage rates right now, but over the long term, it will help bring it down. So all of those trends combined definitely show us that we should start seeing interest rates go slowly downwards as we head into 2025. Now, how far down will they go? That's going to be the hardest part to predict. So right now, you can see this chart up here. On average, we're seeing the interest rates are probably going to start the year in the high sixes, which is where they are right now. And hopefully, in general, by the end of the year, we'll be looking at the low sixes. So anybody that's hoping for rates in the 4% or even the low 5%, probably not going to be happening in 2025. And on the opposite side of things, hopefully we've seen the high of the interest rates and we won't see rates at least sustained over 7% in 2025 in the long term either. But really, it's all going to depend on economic data and what happens over 2025. But in general, the most likely scenario is that we start in the high sixes and we end in the low sixes by the end of the year. Okay, so now let's go ahead and move on to supply. So if you look at all of the expert predictions, typically they're going to range from anywhere from 10 to 20% more homes hitting the market in 2025 than we saw in 2024. On top of that, in 2025, we should be starting out with more inventory on the market than the last 2 years. So we are starting out with a head start, basically. Now, this is where I want to give you my one PSA for this episode. So you might see headlines out there that say home prices are about to crash, the housing market is about to plummet. There are two things that you need to remember about these articles. So number one, oftentimes they're going to be clickbait. So you click on it, you read it all the way through, and then by the end of the article, it's basically contradicting itself saying, actually, home prices aren't going to crash. Or the article is leaving out a bunch of key data points on purpose to skew it one way, typically because there's some financial incentive for whoever's writing the article, whether it's click ad revenue or because they're selling some type of product around the housing market crashing. Okay, sorry for the interruption, but really quick, if you find this information useful and you want to be able to get a step-by-step plan put into place to be able to help you either buy or sell your home sometime in the next couple months, feel free to click the description below where you can find a link to my calendar and schedule a free 15-minute discovery call where we can go over and get that set up for you so you can achieve your real estate goals. Now let's go ahead and head back to the show. And then the second thing you want to remember is that real estate is always local. So yes, there were definitely places in the United States in 2024 where the housing prices did go down, in some places quite significantly. However, that's not the general case for the whole United States, and especially not for Orange County, where home prices actually actually went up more than a normal year in 2024. So all this to say is don't expect a giant wave of inventory to hit the market in 2025, causing the housing market to crash. And there are a lot of reasons why this is not going to happen. So number one, if you've heard anything about a foreclosure crisis coming up, just know that foreclosures, as you can see in this chart right up here, are still at historic lows. We really don't see any type of issue with foreclosures coming in the future that's going to have a dramatic impact on the housing market. And number two, if you look at how much equity homeowners have right now, more than 2/3 of all homeowners have at least 50% equity in their house, if not already have their house paid off. So this is basically telling you that people that are going to be forced to sell their homes are just not going to appear very much in 2025. If someone needs to sell their home, they're not going to give it to the bank so the bank can sell it at a super low price so a buyer's going to get a great deal on it. They're going to say, hey, I've got $300,000 of equity in here. Let me see if I can either work something out with the bank or let me sell it, get a couple $100,000 and either go buy a new place or rent for a while if I lost my job. So the evidence for a massive amount of people to be forced to sell their home in 2025 really just isn't there right now. Now, when you look on the other side of the coin in terms of people that just want to sell their home, right now in California, 82% of homeowners still have interest rates at 5% or lower. So right now, again, we're hovering right around 6.9% for interest rates. So financially, it just doesn't make sense for a lot of homeowners to move homes right now because it's going to be so much more expensive with a mortgage that's going to be almost 2% or more higher than what they have right now. So unless they need to move because of a job location or family expanding, something like that, a lot of homeowners are going to be staying put in 2025. Now, there will be some of those because it has been the case for the last couple years. Everybody's just hunkered down, not wanting to lose those interest rates. But for instance, you might have someone that purchased a 2-bedroom condo with maybe a kid on the way, but at this point now they've got 3 kids in a 2-bedroom condo and they have to move before they go insane. Those type of people are going to make moves, which is going to account for some of this increased inventory because they just don't want to wait any longer or can't wait any longer to make that move. And they're okay with the higher payments, with the higher interest rates to get into a place that's going to be better for their current lifestyle. Now, for those of you that still want to wait for a giant wave of inventory to hit the market, the only way that I see that plausible in 2025 is if all of a sudden we had interest rates drop significantly. I'm talking about at 5.5% or below, because at that point, the financial difference between what interest rate they currently have versus what interest rate they're going to get is going to be much smaller, making the move easier. And this is shown in the data on a survey that was done this year that basically says that homeowners are waiting until interest rates get into the 5 to 5.5% range until a majority of them are willing to sell their home, get their house on the market, and go move somewhere else. So if we see rates drop significantly, especially towards the beginning of the year, then you could see a wave of inventory hitting the market. However, also remember that when interest rates drop, you're going to have millions and millions of home buyers that have been sitting on the sidelines also entering the market at the same time. So if all these homes do hit the market, don't expect home prices to fall. Okay, so now let's go ahead and move on to the demand side of things. So really for demand, it's all going to depend on what interest rates do. The lower it go, the more demand you're going to see. Because right now, there is a pent up amount of demand, especially over this last 2 years, of people that want to purchase a home, but financially, it just doesn't make sense for them right now because of interest rates. So if interest rates start dropping, you're going to see a lot of home buyers re-enter the market. Now, we saw a preview of this in September of 2024, where interest rates temporarily dipped down to the low 6s. They bottomed out about 6.1%. And during that month, we saw a massive spike in the amount of demand in the market. And that's just a preview of what's going to happen if we see that happen again in 2025, because there are so many millennials, Gen Z, those people are trying to purchase homes, but financially it's just not quite in their reach yet. Every time interest rates drop by about 0.25%, about 1 million or even 2 million new buyers are qualified to purchase a home. So that's really what's going to drive demand in 2025 is what are interest rates doing. If we see interest rates continue to drop, demand is going to go up. The faster they drop, the more demand you're going to see. Now, on the other hand, if we do see interest rates stay sticky right around the high 6s or even 7% range, that will mute the demand numbers going to 2025. And so you could see inventory continue to build on the market as we enter the spring market unless we see interest rates continue to go down. And that will definitely have an impact on appreciation. So speaking of, let's go ahead and go over that right now. So as you probably expected, what home appreciation does next year is going to almost entirely depend on what those interest rates are doing. So let's go ahead and say that we have the most likely scenario, which we talked about already, where interest rates start the year in the high sixes and then end the year in the low sixes. Based on that, I would expect to see, at least in Orange County, that we start seeing appreciation anywhere from about 3 to 5%. And that's a pretty typical year in Orange County. It means that supply and demand is going to remain relatively balanced throughout the year. You're going to have a little bit more demand than you will supply, especially as rates start dropping. And it's really easy to see that in the data because, like we talked about before, when interest rates got down to the low sixes, we saw a lot of people into the market. And in general, buyers are going into the market faster when interest rates drop than sellers do. So sellers tend to take their time, see if interest rates stay lower for a long term before they decide to put their house on the market, because they don't want to put their house on the market when interest rates are low and then all of a sudden they jump back up again and then they're in a bad position. So typically you're going to see a lot more buyers into the market when they get to that low sixes, and you really won't see that massive amount of sellers enter the market until we get around that 5.5%. So the buyers are going to have a head start, which means you're going to have more demand than supply, which is why you're going to see appreciation happen in the Orange County housing market as interest rates slowly drop into the low sixes by the end of the year. Now, looking at the next most likely scenario where interest rates drop a little bit faster in the beginning of the year, if we have that happen, and especially if they drop before the spring market starts, there's definitely a very good case to be made that you're going to see multiple offer situations and you're going to see home prices driven up a little bit faster, maybe anywhere in the 3 to 7% range when you get to the end of the year, because if interest rates start the year lower, especially during the most active months of spring and summer, you're going to have more appreciation in the market. And then in the last scenario, which is going to be if they stay around where they are right now or maybe go even a little bit higher, in that case, you will see demand stay more muted and you're going to have homes start to build up on the market. And there's definitely a chance that you're going to see appreciation slow down to maybe 1 or 2%. Or if we have rates that stick above 7% for the long term, there's definitely a case to be made where you actually will see home values start to go down by maybe 1 or 2% by the end of the year, if we just can't get away from that 7% interest rate mark throughout all of 2025. So like I said at the very beginning of this episode, I don't have a crystal ball, especially when it comes to interest rates, so it's always hard to say where it's going to go. But based on the data, it looks like we should have a pretty standard year in the real estate market as we go through 2025. Okay, so now we're going to wrap up this episode with some quick advice for both buyers and sellers who are thinking of entering the market in 2025. But before I do so, I just want to mention again that if you have any questions whatsoever about the 2025 housing market and how it pertains to you and your situation, and you want some more personal advice, please feel free to look in the description below. You'll see a link to my calendar where you can schedule a discovery call. It's 15 minutes long. I can answer any questions you have and help you get onto the right track to be able to either buy or sell a home in 2025. Okay, so now for my advice for both buyers and sellers. So buyers, really, like I said at the very beginning of this episode, it's going to come down to your specific financial situation. And you don't really know that unless you start talking to a lender to figure out exactly where you are right now, because maybe you are in a position to purchase and maybe you're not, but until you run the numbers, you have no idea where your starting point is. So I always recommend that if you're thinking of buying a house in 2025, talk to a trusted lender, get them to run your numbers. If you can't qualify to purchase a home right now, or it's not in the range that you're looking for, that lender, if they're good, is going to be able to give you a game plan of what you need to do financially to get to that point where you're going to be comfortable purchasing a home in the area you want, with the amenities you want, and know that you're going to have a good long-term place to live. So always recommend talk to a lender first, get that game plan between your lender, your real estate agent, and figure out exactly how you are going to tackle 2025 to make that home ownership dream a reality. Now, if you don't have a trusted lender to talk to, I'd be happy to refer you one that I've worked with for a very long time. So feel free just to contact me. All my information's in the description below. Now, on the selling side of things, because we're expecting a pretty typical year in the Orange County housing market, I'm going to give you my typical advice for most sellers, which is if you're thinking of selling your home, you probably want to try to get it on the market sometime end of February through March, because that's going to give you the best of both worlds. You're going to have a lot less competition to deal with on the inventory side of things. However, a lot of buyers are entering the market at that time because, especially if they have kids, they want to be able to close on a home and not have to move until around the summertime. And on top of that, no one wants to move in the summertime when it's nice and hot. So they want to be moving at the very end of spring. So if you get your home on the market at the beginning of spring, that is typically going to give you the best results. Now, similar advice that I had for buyers, if you are thinking of putting your home on the market in 2025, I do not recommend you wait till 2 or 3 weeks before you want to actually have it on the market. You need to be having a plan in place. So I recommend talking to your real estate agent, or you can always contact me, meeting sometime in January and getting that plan in place so you know exactly what needs to be done to get your house ready for the market. Because if you're only giving yourself 2 or 3 weeks to get your house ready for the market, you most likely have a busy life. You're having to do it on the weekends, on the weeknights. It could get stressful. You want to give yourself time to get everything you need done to maximize the amount of money you're going to get from your home and minimize the headache at the same time. So I always say try to plan at least 3 months ahead of time before you want your house on the market, and that way you can slowly get things done, move at your own pace, and it's a much more enjoyable process, and the end results typically are going to be a lot better as well. Now, whether you're buying your first home or you have a house that you're selling and purchasing another, if you're not familiar with the new rule changes with commissions and real estate agents, I highly recommend that you check out this video right here, because things have changed pretty significantly since last year in terms of how real estate agents get paid. So you want to make sure that you understand that before you start talking to real estate agents, getting into contracts, because you want to know what you're signing. So make sure you check that video out. And if you have any questions at all, again, feel free to contact me, set up the discovery call. I'm here to help. And until next week, stay happy, stay healthy, and I'll see you on the next show. Bye, everybody.